Hello, everyone. Today we're walking through a complete trade setup using the Hong Kong 50 Index, 15-minute chart from June 12, 2025. We'll cover everything: entry signals, take profits, stop loss, and our recovery strategies. Elizabeth will take us through the details.
Thanks, Jack. Let's start with the entry signals. As part of our system, we use two custom indicators, one to identify buy levels, one to identify sell levels. We keep it simple, focused on what matters. For this example, the buy level indicator showed two green lines, signaling a potential long trade. The key levels were top level, 24,136.48, bottom level, 23,984.18. Once price breaks through both levels, we enter our buying zone. This is when we put the seatbelt on, prepared for action. However, we don't enter immediately. We wait for confirmation from the second indicator, which provides a green arrow, our signal to go long. The rule is clear. We only act if the signal remains valid after the candle closes. On a 15-minute chart, each candle represents 15 minutes of price action. If the signal is still valid, we place our long entry on the next candle. Sometimes, due to data or rendering delays, signals may appear prematurely, 1, 2, or even 3 candles before the current one. These are unreliable, and we don't trade them. Our focus is always on confirmed, stable signals in real time.
Great. Once we're in the trade, how do we handle take profits?
Once price enters the buying zone and all signals align, we target TP1 and TP2. Hitting TP1 is critical. Approximately 70% of the time, the market behaves like a rubber band. It bounces. TP1 often acts as resistance in a long setup. Conservative traders can close the trade at TP1 to lock in profit. Aggressive traders can move their stop loss up to TP1 and let the market play with the profit already secured. If price continues to rise and breaks above the top level, 24,136.48, we reclassify it as a selling zone. At that point, we wait for a sell signal from our second indicator. The target for this short trade is the same level, 24,136.48, which now acts as support. Typically, price will hit that level, bounce, and then eventually retest the first level, completing the cycle.
And the indicator logic, green versus red lines.
When our indicator shows two green lines, we buy first and then sell later. When it shows two red lines, we sell first and then buy later. That's the fundamental rule. Green means start with buying, red means start with selling.
Now, let's discuss risk management. How do we set our stop loss in these zones?
Starting with the green line zone, identify the nearest support level to the buy signal and draw a horizontal line. This is our virtual stop loss. If price closes below this line, we don't exit immediately. Observe the next candle. If it's red and the following candle is also red, we close the trade at a loss. Then we monitor the chart for a second buy signal, which is Plan C, our recovery trade. For the recovery trade, we set a new stop loss line and aim to recover losses by targeting the original entry point or first stop loss level. Aggressive traders can adjust the stop or close once the recovery target is hit. In the red line zone, it works in reverse. Sell first, place the virtual stop near resistance. If price breaks above and both candles are green, close. If it's red and conditions allow, re-enter with the recovery trade.
And what about double entries, Plan D?
Plan D is our double entry strategy. If price breaks below the virtual stop loss and the candle closes red, we wait. If the second candle is green and account size and risk tolerance allow, we can enter again, a double entry. This is a strategic re-entry based on momentum and account strength. The previous stop acts as a shakeout, and we aim to recover by riding the reversal. In the red line zone, the same logic applies in reverse. Sell first. If price breaks above the stop, wait. Second candle green, close. Second candle red, double sell if confident. This approach requires discipline, account awareness, and confidence in your system. Used correctly, it's a powerful tool for recovery and continuation.
So, to summarize, we enter based on confirmed signals, manage take profits at TP1 and TP2, place virtual stop losses, follow Plan C for recovery, and Plan D for double entry if momentum allows. It's all about discipline, not emotion.
Exactly. Follow the rules, respect the indicators, and your trading becomes structured, repeatable, and much less stressful. Final note, trading involves risk. All strategies are for educational purposes only. Past performance does not guarantee future results. Please review the full disclaimer at the beginning, end, or in the description of this video. Thank you all for being with us and listening through our educational section. We appreciate your time and commitment to learning.